Hi guys, this is Simon with Trade and Perform Coaching, doing the trade review for Tuesday, November 26, 2013, and we're almost at Thanksgiving. This will be the last trade review prior to Thanksgiving. I will not do one tomorrow night, and it's also the first night of Hanukkah, so happy Hanukkah to everybody who celebrates that, and let's hope everyone is enjoying life and having a good time. That is what we are here for. Money is just a tool. So let's discuss how we made some money today. So I really wish I could have recorded this morning's trade review, but in that, what I had discussed was that the environment is such that when we get around holidays, what tends to happen, again, doesn't have to happen, tends to happen is that whichever direction the market's trending in around a particular holiday, that tends to be the side that has the most aggressive participants, whether it's buyers or sellers. I also went over that for the last couple of weeks, maybe even months now. In the afternoon, particularly after 9:30 a.m., we have gone through a slow grind up into the afternoon, and that the long side was the easier side. And so the third theme that's been playing out recently in particular is that the first hour, if we were going to have selling, the first hour has experienced the heaviest selling, and that buying those dips has tended to be very profitable. And so what we were looking for, and again, without revealing everything that that I help set up my coaching clients with, the essence of it is we wanted good rotation, right? And we wanted good rotation into a support area. And so this morning we had two choices. First of all, we had economic data at 9 a.m. I thought we would have one or two scenarios. Either this Globex low area was going to hold here, or we were going to push down below into the support area below, retest yesterday's lows, and then push back up. It was a possibility that we could have pushed down into this 1794 or even into the 1792.50, 1790.50, but it was just unlikely, that's all. And if we were going to get that push, we needed to get underneath the white zone out of the gate and hold and then push lower. And it just didn't happen. There was just no sellers there. And so the few sellers that were the ones who pushed after the economic data, they ended up getting trapped, and then we pushed back up above last night's Globex lows. And that essentially trapped late sellers, and then we pushed, and it's pretty typical, we pushed all the way up to the other end of the range, right? And right in this zone, if you'd taken anywhere in this zone with a reasonable stop, right, you obviously had a nice payday here at the end. Although I was not focused on the shorts, I pretty much made my money in the morning between the NASDAQ and the ES and was quite satisfied with it. I did call out that this 1803/4. I personally went long at 1801. Was very aggressive, and I had a 3-point stop. But I was clear that the better trade, or the easier trade, was from the zones below. Now, some people have asked me to kind of clarify, well, why'd you take the more aggressive long? So I've been doing this for a long, long time. What feels like forever at this point, but better than 15 years. And so I do take aggressive trades, and I'll tend to take my trades consecutively. Getting stopped on one trade does not bother me. And in this market, we've tended to have pretty shallow opens before the market has run up. And I certainly figured that being a holiday day that we might not even get the rotation lower. As it was, we did get the rotation lower, and I was prepared to take the trade if I had to after getting stopped a second time. As it was, I didn't get stopped. However, one part of note or self-criticism was because we did roll over, and I allowed that to kind of get into my head. The rotation up from essentially 1799, for sake of conversation, back to 1802. Okay, so that put me up a point, and that was a 3-point rotation. And when you look at the average rotation of the ES, it kind of called for me to scale, even though I could have gotten my full 2 points on my first scale. It called for me to scale. Why is that? we're in a holiday environment. I just wasn't certain that we are going to run up. The snaps tend to take longer in the holiday environment, and I certainly wanted to make the rest of the trade easy on myself. So I was able to take 1802, move my stop on the second half down to 1800. I had a no risk trade, and it really let me feel relaxed about how the market was moving. I took the second half of the trade out at 1803, and that certainly was nice to get a profitable trade, but really I felt like I mismanaged that I should have left a trailer considering the time of day that we were in. And so I did not get to take advantage of this move higher. A couple of my clients did, but I did not. And certainly wish I had. I had no interest in trading the afternoon. Slow holiday. This is very typical. We simply just trap people up high. We trap people up low, and we essentially balanced through the course of the day. So now that we have that said, I want to address one particular issue. Where a trader, so first of all, there's a lot of traders out there trading without a trade plan, okay? And a trade plan has to cover 3 critical areas, okay? The first area it has to cover is what is the appropriate setup, whether it's a chart pattern, a Fibonacci level, a support and resistance level, whatever that parameter is for your entry, your trade plan should cover. What your stop that you're going to use should be determined prior to entering the trade, and preferably prior to the market being opened. Why? The more you have to think during market hours, the more chances you have of screwing that trade up, right? Accept your risk, whatever it is, write it down, and focus on your entries, and don't worry about your stops. Have your stop be decided before you enter the trade. The third part is, what is your plan for exit? And again, that should be written as well and should be pre-planned. And what I hear all the time is, well, what if it runs 10 points and I take 3 points? That would really suck. Well, technically, yeah, it would really suck, but the reason why most people are break-even traders, or more commonly losing traders, is they let so many winning trades come back and go negative on them. Why? Because you're in this constant battle. Do I get 2 points? Do I get 3 points? Do I get 5 points? Decide what your average P&L is, where you're going to take your first scale. If you're only trading one contract, accept that you're trading one contract and growing your account, and that 2 or 3 points is fine on a trade, right? You don't have to grow your account overnight. If you stay consistent, you increase. And okay, so assuming you have a high odds trade, meaning you know for a fact that over a course of 10 or 20 trades that you're going to have profits over 70% of the time. You have a high odds trade, you execute well. Even if you have one contract, over time as your profits build, and really not a long period of time even, you can increase your trade size, right? If you're executing well. And the fourth piece, there's a magic piece here, and that is entrusting yourself. So there's a reason why it's difficult to follow other people blindly, whether they're excellent traders or they're sucky traders, right? Let's say you're following a fantastic trader. You know he makes a ton of money, he has great calls, and you enter the trade with him. But because you don't understand his parameters, right? The guy just calls out randomly. I'm long NQ at a certain price point, right? Because you don't know this guy or how he operates, even though you know generally he's very profitable, what's the first thought that appears in your mind? Well, maybe this time he's wrong, right? And then I'll lose money on this trade. But you're hanging on this guy's every word, right? The next part is you don't build trust in your own trading decisions, right? And having open-ended areas where don't have certainty leads to questions, and questions that get unanswered lead to fear, and fear leads you to making stupid trading decisions. So what I recommend is, if you're following someone, whether it's me, someone on Twitter, a paid subscription, or even a trading room, which is, by the way, why so many people fail even in good trading rooms, right? Know the parameters that this person is trading, know the point of view they're coming from, and know their time frame that they're trading on, right? And make sure that their interests, their time frame, and their risk profile match yours. And have both a emotional journal that you keep and a trading journal that you keep, and exercise it daily, 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 daily. It's the biggest differentiator between traders who are successful and those that lose. And I do the exact same thing myself, both via video, and even if you don't want to write it, do a video review, right? Store it onto YouTube and review it tomorrow. See what worked for you and what didn't work. So I'll get off the soapbox now, and let's move over to what the profile looked like for both NQ and ES. Now you'll see NQ has continued to break out. We are stretched here, right? If you look at this last stretch before we corrected, it was really from the low. 1, 2, 3, 4, 5, 6, 7, 8 days up. And really it was 7 days up. The 8th day really kind of gave up the ghost there for a nice pullback, right? We are now, if you count the first day off the low, 1, 2, 3, 4, 5. Could it extend some more? Yes. But what has me actually concerned is when I look at ES. Okay, so when I look at ES here, in this holiday environment, we really should have been able to make an additional push now that we got above these highs. And so my concern, we pretty much had a flat day today. And my concern is if we get back below 1798.50 again, which was really the barrier that we had to breach and where we've held the lows the last 2 days. If we get below 1798.50, there's really plenty of room to the downside for a pullback. And it's not natural for the market to extend as far as it has. So I'm neither bullish nor bearish. I could really give a damn either way. My daily intention is simply to take the money out of the market. I don't care which way it's going. But that being said, I need my setups to get better and better to the long side. Let's put it that way. And I am looking for us to trade below that 1798 level. And if we do, ideally I would look for below 1798 and then a setup on a retrace to get a nice short. It's unlikely unless we gap below that and we could kind of get a rotation higher for a test that I would have a good entry in on the first break, especially if it sweeps. And that's all right. I keep emphasizing you don't have to catch the first break. There's usually multiple opportunities after a market starts to break down. You don't have to catch the highs. On the flip side, I want to remind you that people have consistently underestimated the power of the quantitative easing process that we're in. People have called tops. They've gone liquid. I can't tell you how many times I've been criticized. People have chimed in when I say, and all I'm saying is don't try to pick a top. And I'm not trying to pick a top either. What I am saying is I'm highly aware that this 1798 level is important now. If we get below 1798, I am open to taking the short side out of a trade after a good rotation into a resistance zone. I want to take a look at one other thing here, and that's on the 24-hour. And that is on the 24-hour. Let's get rid of all this. Okay, on the 24-hour, if we look here, overnight, we need to get below this level right here. Okay, this 1801 level. But if we can get below this 1801 and then get below 1798, right, the 1798 level, okay, the first area of support is going to come in near the 1795, right? And I imagine that if we break below, that'll be the first area of responsive buyers. But below this 1795, let me tell you, there's a lot of free space down here. And really, this 1780 to 1775 is the first area where I see really good support. Of course, there's smaller support zones, and that would be a big stretch. I wouldn't expect it to hit it all in one day, but I am starting to kind of eye what it would look like overnight. And then the other possibility is usually markets just don't roll over and fall apart, right? And we could certainly go, I could certainly see us fail this breakout here, right? And then go into a trading range where we basically go from 1772 and back to 1800. I pointed this out a while ago to some of my clients, and we kind of zigzag in between here. So I am open to the downside. I don't think we have to, continue breaking out, obviously. And I'm not calling for newer highs. If they happen, that's great. If they don't, that's great. And then the other little thing I notice is we kind of have a downtrend going here. So it's going to be important to get to the upside for us to get above this 1803 in order for us to get a retest of that 1810. And then extensions, I still have possible extensions up to 1815 and 1820 and 1822. So again, all of this is just bigger picture stuff. The smaller picture stuff is pay attention to the rotations and keep your trades clean. So I'm about to run out of time on this review. I will cover more in the morning. The session will be open. Everyone have a great night. We'll talk then.